Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter or X, see what people are talking about. It's probably going to be uranium related since sentiment has obviously changed quite a bit in uranium. It's on the up, that's for sure. That's generally when it gets a little more dangerous to purchase. Usually you want to buy when sentiment's pretty crappy. More like the gold and silver sector that people are pretty poor sentiment over there right now. But let's dive through here. I'll give you my financial opinions as I go through it. It's going to be wealth building, commodity related, or financial related topics. If you want to follow me, you can check me out at @finding_finance on Twitter, or you can join our community, finding-value.com. We still have that 50% discount code going on. September's the coupon code. So, I thought this was interesting. It's not really the migrant encounters or anything, but look at the chart here, guys. It goes all the way up. It does a Batman pattern. It goes all the way back down as it finishes, and then it comes back up. Did you know there are a lot of different chart patterns that are exhibiting this same pattern at different stages right now? There's some down here. This is where coal and uranium ammonium nitrate is at. It's doing the retest of the breakout. Up here or over here, depending on where you're looking, there are some NASDAQ companies, some other stuff. And then on other ones, we have broken to the upside here of a very long, I call it the Valley of Despair. You break out, you do a retest, and then, you do a retest back, which is wave 2, and then you get a break to wave 3. So it's not so much that migrants encounter U.S. border reach the highest level. It's just funny that this pattern is exhibited in this, and we see that a lot in the charts right now. All right, so URNJ throwing some punches today. I think it ended up over 7%, if I can recall, on the Uranium Junior Mining Company. Now, I don't have the volume in here, but there's some people who posted the volume, which we'll get into some later posts, and the volume is just off the charts, baby. With URNJ going up so much, I've got Damson here. Damson. This is, in fact, a childhood picture of Scott. So we found Scott, guys. It's okay. He is joining us here. We've got MicroStrategy now holds 858,245 Bitcoins. And they are currently at a loss of 580 million on their BTC investment strategy. This won't be the second time he goes bankrupt, or this will be the second time he goes bankrupt. It won't be the first, as he went bankrupt the last bull market and then the crash in the dot-com bubble. Here he is again. He's smiling on that $580 million loss. He purchases 5,445 Bitcoins for about 150 mil at an average price of 27,000. Coming on down, we've got oil is headed as high as $150 a barrel unless the U.S. government does more to encourage exploration, according to Continental Resources, the shale driller controlled by billionaire Harold Hamm. Well, that's what he thinks. He thinks that this could get out of control and go to 150 plus. I'm saying it's very much possible. Very interesting volume coming through for URNJ. That's the ETF for the juniors. Look at the volume here, guys. Boom! Volume coming in heavy. You know what they say, guys. It's a heavy flow day. Coming on down, we got Sputz uranium reflexivity effect flywheel. I had to rewatch this uranium clip from Cuppy. I posted that on there if you guys want to hear it or listen to it. He talks about the flywheel effect. This one is Ponzi Finance. We've got peak MOAB, mother of all bubbles. It will be known as the GOAT, the greatest of all traps. I just thought this was funny, guys. SPX and VIX 1990 to present. This is a double top. He's got a high double top here. It is also the Batman pattern with the move in the middle, which could potentially lead to a much lower price, known to be the mother of all bubbles or the greatest of all traps. This would be your bear trap. That is what he's referring to of the mother of all, or the greatest of all traps. It's a bull trap that then sucks people in thinking that it's going to continue. What we're going to see is continued interest rates going up. And when you price these, the S&P 500 or the NASDAQ with a much higher interest rate, the net present value goes way, way, way down. We've got available inventory of unsold homes is climbing very late in the year. In fact, inventory is climbing faster now than it was late year at this time. So we are seeing an uptick in inventory levels, but you got to hold on here, guys. We are at incredibly low levels. We won't be getting to 2 million homes of inventory anytime soon. So yes, I know the bubble the bubble people or the bubble seekers, you're going to have to hold on for a while, guys. It's not going to happen immediately. We're not going to get a housing crash at a flick of the fingers there. Coming on down, it says the oil market is projected to face a supply squeeze of more than 3 million barrels by the end of the year. Well, we are entering quarter three. We entered quarter three, and we are going into quarter four, and the deficits are increasing. I think that $150 a barrel call, and I don't think it's going to happen this year. That's not what I'm projecting, but it could be out there a few years where this thing really starts to ramp up. We'll see what happens this year and maybe 2024. Maybe it's past that. I don't know. But the market is getting a little tighter. This is the silver to gold ratio. It says weekly coiled AF, as F. Could we get a breakout to the upside here where silver just starts to rip it? I would say we could. I know the sentiment is pretty crappy over in the precious metal space. People they're like, how come it hasn't gone up? Tell me why this hasn't gone up. Guys, you just have to be patient. Sometimes you have to wait for the right market conditions. And maybe they're still out a little ways. Maybe they're not. Maybe they're going to rip it next week. Maybe it's going to rip it in 6 months. And I know people will say, well, it's an opportunity, loss. Well, I hate to tell you, but you don't know the future. And it's not an opportunity loss if this goes up a lot. So you kind of have to play by what the market gives you. You got to play by the market rules. The market's not going to come out and tell you, hey, look, we're going to go up tomorrow. You probably should buy me today and not chase the price. But you know what everyone else does? We can have a nice coiled pattern. It looks fantastic. We should be accumulating, precious metals when it's like this, when nobody's talking about and everybody hates it. But everyone's going to come in and they're going to buy silver at $40 or $50 because that's when they notice that the price is going up and that they need to FOMO in. That is the standard retail investor. Lynn Alden says, 1940s, you say, says this is what it looks like when 2 generations of young people are essentially locked out of home ownership. The share of young adults living with parents hasn't been this high since about 1940. Many of the same are set to have to start repaying student loans next week too. And you know what I see in this chart, guys? You know what happened in 1940s? The largest housing market boom started in 1940s and ended in 1980. Look what we got here. This is what? This is a bunch of young adults that is fuel to buy homes in the future. Yes, some of these people are going to inherit their parents' homes. I understand some of that. Don't worry. But guess what? Some of them are not. And they're going to fuel the gigantic boom in buying homes because we have the largest share of young adults living with parents in history. And that is fuel for the fire. It's time to take profits in NVIDIA, says Bernstein. Uh, where were you 3 weeks ago? Bernstein says investors should take profits in pricey tech stocks such as NVIDIA and these others. Yeah, no duh. I will say no duh there. Now, this one here, I don't know if I agree with the terms here. It says nearing the rim of the inner bowl. Um, I didn't know we were doing rim jobs here, guys. That's pretty gross, but uranium's definitely broken out. It did contact the rim. It has stayed inside the bowl, and we've got some projections on this here of if you're a bowl, if you like the bowl type analysis. This is 39, 49, and 72 for URA. That's URA and the rim job that we've got going on here of the inner bowl. I've got 30-year and 10-year yields surging higher. Look at this, guys. Boom! That is future rotation of money. Future rotation of money. So those are both up quite a bit. They're breaking out. And what I see there is more rotation of money out of bonds and more rotation out of money stocks eventually when people figure out that we've got yields surging to the upside. Eric Nuttall says, to all the oil bears, even those who are hibernating at the moment, despite well over a year of recessionary fears, well, there is no demand problem. This is the daily global gasoline diesel demand measured in 2019 base, and it is, well, it is up there. So it is no problem for demand. Even global estimated passenger jet fuel demand is pretty much back to 2019 levels. Grady, my boy Grady. This guy's got it right, guys. He knows what's going on. Silver priced in major fiat currencies are getting ready for a synced historical 12-year trend line breakout. That's a mouthful, guys. This is against Australian dollar, Canadian dollar, the euro, and the Great Britain pound. These things are all squeezed to the corner. This thing's ready to blow to the upside. Go silver. I think we could see a big move to the upside in silver. It's just waiting for the right market conditions. It's waiting for people to come in there and bomb rush it. That's happening in uranium right now. I understand that. It's going to happen in silver. It's going to happen in a lot of these other sectors. And generally, when you want to buy something, you want to buy it when the sentiment isn't that great. You buy it before the breakout or right when it breaks out, depending on if you're a trader or not, or if you're a long-term investor. But these are all ready to, I think, to move to the upside quite dramatically. These are big patterns, too. Patterns that were created at the peak of 2011 all the way till today. Patrick says, keep an eye on this chart, silver's performance versus the SPX. The ratio helps identify possible 90, 36, and $25 targets. We're squeezing up. We're about to break to the upside for silver outperforming the SPX. And we could go way up there in terms of the price of silver. Again, $25, $36, $90 silver. If we were to go up against the S&P 500 to levels that were similar in 2011. Here's another one. It says the oil sector led the commodities baby bull move up from the bear low in 2020. The chart says it's now time for precious metals to shine. We are way down there, and again, if you had bought in 2000, you would have been handsomely rewarded. If you had purchased in 2015-16, handsomely rewarded. Another buy there, handsomely rewarded. We are back at this really low portion. Maybe we come back a little bit lower, but I think we're going to get a big move to the upside like Grady is stating here, and you will be handsomely rewarded. We've got Scott here. Damn, son. Potential path, Pfizer, PFE pattern overlaid. So what he did is he overlaid Pfizer and scaled this move. This is the first wave, the second wave pullback, the third wave, the fourth wave is the sideways move, and then the fifth wave is that upper move. He's got this. This is URA. $175 is what he's got. I know I did a lot of price projections using a bunch of different ratios and stuff like that. He just threw this on here and scaled it, and he's getting about 175-ish. That's a long way from 26.79. So good work, damn son. Uranium, the data on the ratio charts. What do we got here? Whoa, 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 whoa. No way. Uranium's breaking out against the S&P. Uranium's breaking out against the Dow Jones. And uranium futures pricing is, see ya, wouldn't want to be ya, against the M2 money supply. All look fantastic. This is uranium is unleashed. The cheetah is coming. I posted this yesterday. Sunday is when I posted it. But yeah, we're seeing a cheetah move in the uranium stocks. Again, let's hope that momentum can continue with the uranium companies. A lot of people have been posting a lot of negative news. I said, you know what? Let's post some positive news. Iron ore broke out to the upside of a falling wedge. The Baltic Dry Index also looks pretty solid. Both look like they could outperform gold as well. Is this bearish or bullish for the economy? And I'm sure people are going to say, why don't I have copper in here? Or why don't I have something else? But you know what? This is looking at it from a positive perspective. It is weird that we're seeing the Baltic Dry Index move higher and iron ore. That's generally a sign of strength, not of weakness. Since everyone's so negative at the moment, I'm going to post some more positive things. We've got a big move let me move this over here so you guys can see it. It snapped it. It snapped it, guys. It snapped it. Okay, there we go. So there's the big move to the up for all employees for construction. There's that big move there. We've got total construction spending. Well, that's not really turning down. That's still moving up at a 45-degree angle, so that's still positive. We still have I know a lot of people say the Shiller Index. The Case-Shiller Index is peaking. Well, if you divide it by the M2 money supply, it's actually quite low in comparison to where it was in the late 2000s. And then we've got the Case-Shiller Index, the home price index, divided by the Dow Jones Industrial Average. There's that pattern again, kind of the Batman pattern almost, or a head and shoulders. Came all the way back down, and this looks like it's bottomed, ready to turn back up. What does that mean? Well, that means that the home prices, the Case-Shiller home price index, may actually outperform the Dow Jones Industrial Average. That's generally what happens in increasing interest rate environments. Interesting there, interesting. Coming on down, we've got more ratios I'm talking about. And this is the one I was talking about, the inflation-adjusted home price. It says even on an inflation-adjusted basis, home prices are now 10% more expensive than they were in 2008. Hold on. This is what they're showing us, right? Well, didn't I just show you guys that this is really low in relationship to the money supply? So I don't know which one's right here. I think this guy, Reventure Consulting, I think he's trying to sell you guys on something. A little bit of fear. Here's nothing to see here. Bankruptcy filings have recently reached levels on par with the 2008 Great Recession and the 2020 COVID-19 pandemic. Now, here's another thing to think about, guys. People will say, look how bad this is. Look how bad this is. It says this indicator often suggests that the economy isn't performing well and has historically always been followed by massive stock market crashes. Are you sure about that? Because this here is when you should be buying the stocks or certain areas. So bankruptcies generally peak at this level. If we're already peaking, why would we crash then if we've already peaked in bankruptcies? Maybe a crash does come, maybe a slowdown does come, but a lot of the times these are usually signs that you want to basically be a buy-in, not necessarily be worried. Same thing, inverted. This is your S&P priced in gold. We're probably going to fall lower, where gold's going to outperform the S&P 500. This is gold divided by the S&P 500 flipped around. We are very low, and we're going to have a big move of gold outperformance of the S&P. We're very, very cheap, guys. This also is in the valley of despair of the double bottom that we always look for, the booty bottom that I like to talk about. So I think we could see a big move to the upside where gold outperforms the S&P, and that means silver goes up, platinum goes up, oil goes up, all these other commodities. They all head higher. Great chart. Increased talk of a soft landing tends to precede recessions. And we do have a lot of soft landing talks going on at the moment. So that's where I'm going to end it. That's what we got for today, guys. Give me a thumb up for the content. Subscribe to the channel and subscribe to the website. But everything looks like okay for commodities. Could we see a slowdown? It is definitely possible. I'm going to ride through it. The big picture charts for all these different commodities and individual companies and ETFs, they all scream higher. So my guess is that they'll probably here's my guess. All right, this is my guess. It's just a guess. I think that a lot of these will continue to move up before we hit a recession. But again, that's a total guess. It's not going to come from the housing market to slow down. It's going to come from something else that I'm not going to be able to see, or that not a lot of other people are going to see if we get a slowdown. So it's difficult to say if we're going to get one mid-stride in a commodity bull market. But generally, you do get slowdowns, and recessions are possible in these inflationary times. So that's what I've got to say. We'll catch you guys next time. This is Finding Value.